Good morning, traders. This is Tony D from the Easymarkets dealing room. An important update today because there is a lot of movement. Those looking for lack of movement yesterday because the holidays were a little bit surprised when I woke up this morning and saw the crash in the euro. And let's have a little bit of a chat about that because it is the main story in the market right now. And this is on the Italian risks that are now getting very serious. And the reason is that although the announcement that there was going to be a new interim technocrat prime minister government led by former IMF member, the very chances are there's going to be a snap election. All right, so the main parties are now fighting over the story and the message, and there's a lot of presumed interference from the eurozone now, and so the people on the street are going to very likely take a dim view to that. So in the re-election, in the new election, there's a chance of anti-EU becoming a major theme in the parties that are clamoring for votes. And already the new government that was formed and then has been disbanded already was a very fringe parliament anyway. So the parties were on the definitely Eurosceptic spectrum, and if they were to gain more votes and have a more stronger mandate, then the chances of the actual whole election becoming a pro-EU versus out of EU debate is going to really create a couple of months now of uncertainty in the euro, and very negative in general overtures here for the Italian economy and debt, which is what you saw last night. Italian yields surged after initially having a nice little bounce in the euro and Italian yields dropping. They surged again as it became clear what this meant, and the markets took a dim view of it. So the euro is at multi-year lows now, and is looking a little bit more pressured towards testing some of those key levels. So the previous swing low back in October was just a little bit lower than here. This is the next big level that every trader is looking at, 105.50. Now that is very likely to be tested in the coming days as the negativity continues. Some sort of clarity from the ECB about what the actions they're going to be taking in the next couple of months is going to be key as well, because ECB was on track to end the QE program, but with the ECB being the only one at the moment buying Italian bonds and the market heavily selling them, there is some well-formed arguments here that the ECB is going to remain in the market for until we get some sort of stability. So it might not be, the timing may not be right for the ECB to end its QE just because of the Italian side of the equation, and that could lead to a little bit more delay in when the ECB both ends it and then starts to think about raising rates if everything does turn out okay in Italy after September. All right, but that's still a big if, and when there's uncertainty in the market, it's very easy for the sellers to gain control because the buyers have such a lack of conviction. You saw this in the pound back in the Brexit days, and you've seen it in almost any pair where you've seen the uncertainty reign. Well, definitely you saw it in the euro back in the previous crisis that we had there, the sovereign debt crisis. But now this the resurfacing of the sovereign debt crisis via Italy, and it could become a European crisis again because you are seeing some tick higher in Portugal bonds as well overnight. This has all the makings of being a multi-month story rather than multi-week. So it does get a little bit more less technical in terms of where you can buy, where you can sell. Looking to sell rallies while this is in play does seem like the favored way now. It's turned from potentially a problem into a big problem quite quickly, and that's the nature of this sort of story in the markets, that it can become real, and if it does, then you have to adjust your view. So if it's oversold, but not when you talk about the story. The market still has room to move as well, and it could end up being the thing which takes us below 115. Alright, if you're talking about how the rest of the market's faring, well, euro is such a big boy that it is very hard for the US dollar not to gain against most pairs, and you saw that with the Aussie dollar under pressure. You see the pound under pressure a little bit as well, and that's it's going to be harder for for both these pairs to come up for air. The dollars index in itself is making gains. It's not pure though, because the other big pair, dollar yen, is gaining in the risk-off environment. So if dollar yen's falling and the euro's falling, then euro yen's really falling, and it's breaking out of its downward trend channel now. Now the big target for the euro yen was 126. So we are here now, and it's this is a 50% retracement of the whole rally that we saw in 2017. So we do have to be a little bit cautious that we're not getting ahead of ourselves for the big levels. So, you know, euros at big levels too, but by no means is it safe to buy big levels just because they're there. If the story is big enough, it can crash through them. It is going to be interesting to see when the rest of the market comes back online. Today you've got US and UK coming back. Maybe things will settle down a little bit, lead to some sort of recovery, but that recovery shouldn't get too far, like we said, because the story's not going away, and it's going to provide constant ammunition to the sellers until we get some sort of resolution or polling that suggests which party is going to be doing well in the next election for Italy. Alright guys, I hope that clears up what's happened overnight. If you have any questions about the rest of the day, or some of the crosses coming forward, because some of the crosses now are really in play, contact us on the numbers below. If you're not a member of the Easymarkets dealing room, please sign up on the link below and you'll be assigned a dealer like myself, or Jonathan Snyder, or Jimmy Pan if you're in crypto. Is very solid in those fields. They can help you with your trading.